Stocks fall, the dollar strengthens as President-elect Donald Trump vows to impose additional tariffs on China, Mexico, and Canada. The EU proposes sanctioning Chinese firms it says are aiding Moscow's war effort in Ukraine. More restrictions on Russia's oil tankers are also said to be under consideration. Plus, more economic troubles for Germany as ThyssenKrupp announces plans to cut 40% of staff from its struggling steel units. So there is quite a lot going on. Let's take a look at the European markets map. Everything moving the markets is what Donald Trump has said on tariffs, this extra tariffs on China and, of course, the rest of the world. So let's get to the markets. Here it is. You can see very definitely some, red on the screen. Automakers actually leading the declines. Again, when you look at something like Stellantis, which produces vehicles in Mexico, it's down some 5.8%. So we're looking at the companies that have a lot to lose if there are extra tariffs, especially on Mexico and Canada. CAC 40 DAX down between 0.6 and 0.8%. Let's go straight to cross-asset because there is quite a lot of dollar movement as well. There's gold movement. We look at Bitcoin under $100. You can see S&P futures a little bit down, but it's really playing out in other parts of the markets, including some of the automakers in the U.S. We're looking at central bank reaction function, what it means for interest rates on the longer term, the U.S. 10-year yield at 4.29, and then the Bloomberg U.S. dollar index at 1,288. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is the Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to the Pulse. I'm Francine Lacqua here in London. Now, President-elect Donald Trump says he will impose an additional 10% tariff on goods from China and 25% on all products from Mexico and Canada, citing a clampdown on migrants and illegal drugs. Now, for more on all of this, let's bring in Bloomberg's Ross Matheson and also Michael Strobaek, Chief Investment Officer at Lombard Odier. So, Michael, thank you so much for joining us. Ross, there's a lot to talk about because the market was kind of in a wait-and-see situation. Let's see if Donald Trump will really impose tariffs. Is this a negotiating starting point because he wants a deal, or does he want tariffs?
Well, certainly this seems to be the opening gambit. It's interesting to see also what he's tying it to, because this is not him saying he's going to put tariffs on China or Mexico or Canada because of economic policy or corporate behaviour. It's using tariffs as a lever for political policy to say, well, I want action on migration and fentanyl. I want action on drugs. And if you don't do those two things, I'm going to respond to you by hitting your companies and your products. And so it's using, again, what we saw very much in the first iteration of Donald Trump, is tariffs are not just an economic tool, but they're very much a political and a geopolitical tool. And that's the way he's going to see it. So this is probably an opening gambit. It might be also he saw the response to the nomination of his Treasury Secretary and, all the talk that he might be slower on tariffs potentially than Donald Trump would want. Maybe this is the message saying he would act, although 10% on China is probably something China could live with from the outset. But certainly it's just the opening salvo. He's not even in office yet. So what this means is countries like China, Canada, Mexico have, a few months at least to think about how they would respond in actuality if this does happen.
Michael, the problem is that, again, it's difficult to look at policy. This is not, it's policy, but actually it's more of a negotiating tool.
Yeah.
So how do you, as a market participant, how do you make sense of it?
Well, he is using it as an all-weather tool for obviously getting to results that have nothing to do with economics. What it does is it puts pressure on currencies. Tariffs are messing up with the terms of trades of countries in ways that firms are not prepared for long-term. Short-term, therefore, you're on the losing end if you get hit by tariffs. And the expression of that is actually a strengthening or weakening currency to balance out the terms of trade.
But, Michael, I have many questions. First of all, do we know, is this inflationary? Because, again, there's many questions. If you're hit by tariffs, does it hit growth first or inflationary? Because that will change the reaction function of central banks.
It very clearly first hit inflation, and then depending on how effective it is in, let's say, the U.S., it may or may not hit growth, but it clearly protects U.S. companies for a period of time from import from other places.
Raz, is it too soon to infer some of the other policies, given who he's put in his cabinet?
Well, it's very hard to know because some of them have to be confirmed first, although we'll see even by the replacement of his nomination for Attorney General, the replacement nominee is also very loyal to him, someone who's been a Conservative lawyer in his orbit for many, many years and someone who will faithfully enact his policy. And so what he really wants, either way, is people who will enact his policy perhaps slower than he thought. And again, with the Treasury Secretary pick, Besant is clear, he's a fiscal conservative and so he might try and manoeuvre a bit. But elsewhere, he's looking for total loyalty or he will replace you pretty quickly. But it's just clear that Donald Trump will, if he sees something he doesn't like or something you do he doesn't like, he will just act accordingly. And it's very clear what he wants sorted or what he says he wants fixed very early on. He wants the war in Ukraine to come to an end, for example. He wants the war in the Middle East to come to an end. And whatever happens, whether it's ceasefires or peace deals that are, not necessarily conducive for Ukraine, he will declare victory and say that that's done because he likes to declare victory on things. And so that's very much the way he's going to operate.
But, Roz, do you take every time there's, he says something, do you take it at face value? Because that's going to be difficult for the markets. You either trying to say, well, this is what he's going to try and do and the markets may do this, or do you literally just think, well, he wants this and he's saying it, so that's what we should model?
Well, that's the difficult thing because Donald Trump can say something one day and the next day say the opposite. So he might say that one day he's going to sit down and talk with the North Korean leader and the next day he say that he wants war with North Korea or something. So it's very hard to beat. But you have to take him literally each time. And that's the difficulty. But countries in like China, Europe, for so on, what they need to do is look through the very immediate and say, where do we want this to be in 6 months, a year, 2 years? And how do we navigate our relationship with the White House through to that, that noise of the immediacy. So you've got to keep the long game in mind.
So, Michael, how do you deploy capital in this kind of very uncertain world?
Well, follow and don't be on the wrong side of Trump, at least for the near term. I think in this term you need to take him more literal than in the first term. In the first term he was balancing, trying to find compromises with people in his cabinet that he didn't really like and that were not loyal to him. He's picked a cabinet now that is 100% loyal to him. And I would take it very serious, what he is saying. He is saying this now before going to office. That creates, the stakes are being built up for deals. That's very clear, but I would take him very serious.
Yeah.
Having said that, I would still deploy capital on the side of Trump, on the Trump trade, which is US equities, US dollar, actually US rates, which will stay quite high because tariffs are inflationary.
So on dollar, I mean, he doesn't really want a stronger dollar. So actually, this could be complicated for.
Then he should stop talking about tariffs.
Yeah, who's going to tell him? Treasury Secretary or the Federal Reserve?
He's quite resistant to advice. So, but he is also sort of a guy that wants to get to a place where he can say, I did this to protect jobs in the U.S.
So, Michael, again, what's changed in terms of your portfolio management since, since he got elected? Have you just gone and doubled down on some of your positions in the U.S., or have you had to move stuff around?
Well, we went overweight equities, and we think Donald Trump's re-election is a reconfirmation of a risk-on environment for the moment. Actually, U.S. growth is going to stay probably stronger, not because of the tariffs, but because of sort of typical Republican policies, lower taxes, deregulation, and he has vowed to invest materially into the U.S. industrial economy with potentially debt going $6 trillion higher. And that is a boost to growth. It's what we call U.S. on high octane, and you need to be on the right side of that, and that is be long U.S. equities and be long equities in general.
Roz, how much do we listen to? Of course, I mean, we listen to the Treasury Secretary, but how much influence do we think that he'll have on President Trump?
Well, again, you were just hearing, like, he does demand total loyalty from everybody, but we also know, again, like, he tends to listen to the last word that's said in the room before people leave. And so if you're Besant and you're thinking, what I need to do here is to be the last person speaking in the room and plant that thought in Donald Trump's head right before I walk out the door, maybe that's the only tactic.
And, Roz, we're also talking about a possible ceasefire in the Middle East. I mean, what do we know?
Well, obviously, there's been talk for days that we might get to a ceasefire with Hezbollah. This is obviously in Lebanon, not in Gaza. I mean, the possibility of a ceasefire in Gaza seems to be off the table at this point, but we do know the Israeli cabinet is meeting today, the security cabinet. Hopefully, we'll get an announcement later today, but that's just for Hezbollah in Lebanon. It's not for Gaza.
All right, thank you both. Bloomberg's Ross Matheson and Michael Strobaek, Chief Investment Officer at Lombard. Odier stays with us. Plenty more to come. This is Bloomberg. Well, the Fed's Minneapolis president, Neel Kashkari, says it is still appropriate to consider another interest rate cut in December. Now, Kashkari was speaking exclusively to our very own Hazlinda Amin. He also weighed in on the impact of Trump's potential tariffs on China.
You know, there's obviously the risks of potential tariffs back and forth between the U.S. and China, which are notable. The other big concern is just the domestic Chinese economy and the slumber that it appears to be in. From our analysis, the heavy weight of the housing sector that has been a driver of Chinese growth for so many years is now appears to be weighing down the Chinese economy and just the struggles that the Chinese economy is facing. And so I'm just something that I'm watching a lot is what the policymakers in China do, and can they get the Chinese economy on a stronger, sustainable growth path? You know, reinflating, so to speak, their housing bubble doesn't seem like it's a long-term strategy. So what is China's growth strategy? I agree the potential tariffs between the U.S. and China and back and forth is something to pay close attention to, but I think China's own domestic challenges are also notable.
Do you think that if China's economy remains lackluster, we could see some contagion and other Asian economies and perhaps even further afield may get impacted as well?
Certainly possible. I mean, China is obviously a huge economy, and if a huge part of the global economy just grows slowly, that's obviously going to have an imprint on everybody else. For example, commodity markets would be one of the first places that we would see that, whether it's for steel or for iron ore or other metals or other minerals. So that's something that we're going to pay close attention to because it just matters a lot for the global economy. But then I also think many other Asian economies are linked to economies all around the world. I was just looking at some analysis on where the U.S. imports most of its goods. Of course, China dominated that 6-10 years ago, and China's share exporting directly to the U.S. has actually fallen quite a bit. And countries like Mexico and other Southeastern Asian countries have picked up the slack. And so I'm actually optimistic that other Asian economies could continue to perform well because they're connected to the U.S., they're connected to Europe, to South America. But of course, China is just so large that what happens in China matters to everybody.
Well, that was the Fed's Minneapolis president, Neel Kashkari. Well, still with us, Michael Strobaek, Chief Investment Officer at Lombard Odier. Michael, thank you very much for sticking around. I mean, it's not easy being at the Fed right now because you'll probably get into the political, eyesight and the eye line of Donald Trump, and he can't really do much, but he can make your life pretty miserable. Yep. So does that, change? I mean, does that have implications for Jay Powell, or is your longer-term concern actually that they're kind of stuck on rates?
I think rates won't go as low as we could have expected if Kamala Harris had won. That's very clear. We had sort of 3.5 end of next year. Now we're thinking 4. Trump, I don't think, will go too hawkish on Jay Powell. He actually reconfirmed him, and Jay Powell's successor, most likely, is also a Trump sort of a person. But Trump, of course, if there is trouble, wants lower rates, and that can stress Mr. Powell perhaps less than it could stress markets because he's trying to interfere with Fed independence, and that is not good.
Michael, I mean, when you look at, again, what he wants on immigration is to get rid of some of the drug cartels. Mm-hmm. Okay, if he gets rid of too much immigration, even the illegal kind, then this will hurt productivity. I mean, this will hurt the U.S. economy, which has done quite okay in the last couple of years.
Absolutely. I mean, immigration is net a positive almost for any country if it's productive labor coming in. But it has become a material political problem in the U.S., especially for the Democrats. And the two reasons why Trump won was really immigration and inflation. Immigration he's going to deal with hard. Inflation is a much tougher thing, and if he keeps talking tariffs, that is going to be probably his biggest challenge. But what he really needs to do is to get cheaper food on the tables of Americans that don't have much money.
But Michael, so this for me is a real surprise, right? Because you see the similar dynamics for inflation going down. The cost of eggs, I think, has gone up like 3 times in the U.S. to like $18. I mean, something that in Europe, frankly, no country do we see it.
Yep.
I mean, why is that? Is it the way that the supply chain works, or?
I think it's quite frankly, it's a supply chain problem that has moved its way back. There's a little of what I call profit inflation that really also needs to come down. Yeah. But the problem with inflation is that it expresses price increases. we're not talking deflation or price coming down. And it is really ridiculously expensive in the US, certain things, when you go there.
Yeah.
And I'm convinced it's the reason, the second reason why the Democrats lost.
Yeah.
And Trump may have to be more creative than just slamming tariffs on stuff. I mean, food subsidies, etc., can come on the table here.
What happens to China under Donald Trump, and what does it mean for investment opportunities?
Well, it's the worst possible news for China that Trump comes back in this form with this agenda, because China was slowing down already. China has material structural problem in the real estate sector, and now with domestic consumption, because consumers are saving too much. And as we just heard, they need to figure out how to invigorate their economy. I think it can only happen if they stop the slowdown of real estate prices. And they have to keep stimulating in the face of Trump. And he has the stronger end of this at the moment, because the one global winning country of globalization was China. And Trump is really, if not deglobalization, he's going to put a brake on that. And that's a problem for China and for Europe.
Michael, thanks so much. Michael Strobaek, their Chief Investment Officer at Lombard, Odier, stays with us. We'll talk gold. We'll talk about the UK next, when the Chancellor defends her budget from last month, despite a warning from the chair of the country's most powerful business lobby. That's next, and this is Bloomberg.
I've had lots of feedback on the budget, but what I haven't heard is any credible alternatives to what I did to put our public finances on a firm footing. What I am really clear about, and I've said it already a couple of times today, that public services now need to live within the envelope that we've set. We will not be coming back to top up those budgets. We have set the envelope for public spending.
Well, that was the UK Chancellor Rachel Reeves addressing the CBI's annual summit in London and defending her budget last month. Still with us, Michael Strobaek, Chief Investment Officer at Lombard Odier. Michael, I know one of your contrarian calls is UK gilts. Yes.
Look, I think what we need to see here in the UK is a responsible fiscal policy that brings the path back to credibility for the country. And I think we're still seeing a bit of a slowdown in Europe in general, UK being part of that, and that's why we have a preference for bonds, treasury bonds, or bonds and gilts.
So talk to me also about Germany. I mean, if you look at, also what the UK is trying to negotiate with Europe, this relies and depends on a very strong Europe. Germany is in turmoil, so I don't know what comes next and what that means for markets, but also in dealing with Trump tariffs.
Germany has fallen into the deepest hole it could economically and politically and geostrategically. Germany made itself dependent on cheap Russian gas, went away. Chinese exports are melting or hurting, and for the first time in 25 years, we're seeing material layoffs at the sort of the icons of German industry. And we will have an election next year. I would have hoped it came earlier. I'm not sure it is going to bring much change to the economic situation of Germany, because what Germany really needs is more spending, more investment, better infrastructure, and a firm, if you will, alliance in Europe back with France. And all of this is missing.
So what does that mean very quickly on European equities? Do you still look for companies that export abroad or that have a big footprint abroad?
Solid global business models will, I think, always work. And they also work in Europe. Now we have Trump. He's slamming everyone, he says, with taxes of 10% or more. We are underweight European equities in our portfolios versus the US, because we think it just still needs more time for Europe to figure out its path in this new world order.
Michael, thank you so much, as always, for joining us. That was Michael Strobaek, the Chief Investment Officer at Lombard Odier. Coming up, more on Germany's industrial turnaround, with ThyssenKrupp's steel unit planning to cut 40% of its workforce. More on that story next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Stocks fall, the dollar strengthens as President-elect Donald Trump vows to impose additional tariffs on China, Mexico, and Canada. The EU proposes sanctioning Chinese firms it says are aiding Moscow's war effort in Ukraine. More restrictions on Russia's oil tankers are also set to be under consideration. Plus, more economic trouble for Germany as ThyssenKrupp announces plans to cut 40% of staff from its struggling steel unit. So let's get more on the economic downturn in Germany and the job cuts at ThyssenKrupp. It comes as a bleak moment for many Germany's biggest industrial companies. Now let's bring in Bloomberg's Oliver Kirk, who's in Berlin. Ollie, good morning. So how bad are things getting in Germany's industrial sector?
Yeah, Francine, we've been talking about it for the last really couple of years, and every time we get those prints on the manufacturing data, we pull up the chart and we see that it's been in contraction for over 2 years. Last time you had a positive print was back in July of 2022. And again, it's fine to sort of chart these things in the theoretical abstract into the chart. What we have gotten in the last few weeks are absolutely huge job cuts across some of these sort of anchor companies here in Germany, the latest of which was ThyssenKrupp yesterday, saying that they're going to cut 11,000 jobs over the next decade. That's 40% of their steel unit. And that follows just days, Francine, after Bosch said they were going to cut 5,500 jobs. And that followed just days before Ford saying that they were going to cut 4,000 jobs. We still don't have the final tally for how many jobs are also going to go at Volkswagen. There have been long discussions between the unions and management. That could be anywhere from 10 to 30,000 jobs. Again, these are sort of down to the negotiations. But what this basically amounts to when we do the sort of arithmetic here is somewhere between 30 to 50,000 job cuts in very short order to this economy after we have been talking about it for sort of years in terms of the decline of the manufacturing sector. This is where it gets real. The question is, how far through this cycle are we? Are we at the beginning of job cuts? Are we at the end? I talked to Carsten Breschke yesterday, who's really been way out ahead, who's been talking about sort of the warnings here for the last couple of years of the German economy. He thinks we're basically smack dab in the middle of things right now, that there is still more pain to come. We've got it from the sort of manufacturer providers to the automotive industry. We're getting it from the automakers. We haven't heard anything yet from Mercedes or BMW. And the other thing, Francine, we should also mention, it's a lot harder to get a read on some of the smaller companies. When we get job cuts from very large companies across Germany, they make big announcements. What we don't hear so much about are about the SMEs, the Mittelstand. I had this survey out of IFO just a couple of days ago. I think it's worth mentioning that the share of German companies that fear acutely for their economic survival has now risen to 7.3% of companies in Germany. That is up half of a percentage point from 3.8% in the month of October. So again, it's hard to see the sort of light at the end of the tunnel at this stage.
So, Ollie, quickly, how's this going to shape the election?
Yeah, so listen, I wouldn't want to be the incumbent going into this where we're talking about companies slashing tens of thousands of jobs, and that is basically what the ammunition is going to be used against SPD and the coalition, basically saying that they've mismanaged the economy. This could play potentially in the hands of the far right, the far left, the sort of Germany first parties, though their credentials in terms of turning around the economy are not as strong as, say, the CDU. What we have seen is the CDU is continuing to maintain its lead, but again, Merz's sort of formula for reviving the economy is cutting taxes, cutting bureaucracy, cutting regulation, cutting benefits, cutting pensions. These things could help around the margin, but it does not sort of replace the engine of Germany, which is the fact that they just don't have the export markets that they used to have. And when you wake up here in Germany and you see these sort of tweets from Donald Trump saying he's going to slap 10% tariffs on China, talking to Mexico and Canada about the same, Germany was enemy number one in terms of trade for the Trump administration part one, so they're just waiting for their turn.
Ollie, thanks so much. Oliver Crook there in Berlin. Now, G7 nations are set to increase pressure on China for allegedly supporting Russia in its war against Ukraine. That's according to an early draft of the communique seen by Bloomberg as foreign ministers meet in Italy. Now, we're now joined by Charles Lichfield, Deputy Director, and C. Boyden Gray, Senior Fellow at the Atlantic Council's Geo-Economics Center. Charles, so good to speak to you. You're usually based in the U.S. You're usually based in D.C. You've been doing a bit of a European trip, I guess, to get the flavor of what should worry people. Is Europe ready for a Trump 2.0?
I was in Bloomberg. I'm at Bloomberg now, and last week I was at Brussels the whole week, Francine, and they were very adamant, and there was a lot of message discipline on their preparation, on a sense of calmness. It's not 2016. We've dealt with Donald Trump before, and we're ready to make a positive offer to him and show him what has changed. Europe is buying more US weapons, it's buying more LNG, it's tougher on China, and so they're hoping that this is convincing enough to avoid Trump going down an escalatory path on trade with the EU. They're not sure it will work, but they've done a lot of decision trees and a lot of scenario planning.
I mean, I guess that the concern is that we know that Donald Trump wants to speak to Macron. He wants to speak to Meloni. He wants to talk to country by country and almost strike a deal unilaterally. That's not how it works in the European Union.
It's not how it works in the European Union, and I think Donald Trump actually knows that. We've started to hear rumours from the last time he was in power. People are starting to talk about it and saying that sometimes when an individual leader would try to get a favour out of him, he said, well, I'm in a discussion with Jean-Claude, who's Ursula von der Leyen's predecessor. So he certainly does want to use bilateral relationships, including with some people he knows from his previous time there. But I think he is ready to talk with the European Union about tariffs and about trade. There is a new person there. We don't know what the relationship will be like with von der Leyen. They didn't have much overlap last time. So there is a question on who is the interlocutor. There's also the new council president, who's quite jovial. That could be an option. And then Meloni and Macron will be key players. There's also Mr. Orban in Hungary, who isn't entirely representative of the EU27 and is also quite close to China. So maybe he won't be the best interlocutor either.
So does Europe need to show that they stand with the U.S. against China to get something from Donald Trump?
That's very important. And the EU has evolved on this. They have all sorts of new mechanisms, and they're happy to use them. People watching us will remember the decision on electric vehicles, which is meant to reestablish a level playing field. It's not the same sort of unilateral and quick approach a U.S. president can take. The U.S. president can label Chinese issues to do with the economy as national security and can move fast. The EU has to move as a 27, and the tariffs aren't as high, but they can at least show they're doing something, and that's a very important lens through which Trump will read Europe, how tough they're being on China.
Theresa, you're based in D.C. How will Donald Trump be different this time around? He's formed a cabinet where there are many more loyalists. Does he really want to impose these tariffs, or is it just a negotiating tactic?
I think there will be an increase in tariffs across the board, not as high as some of the campaign was suggesting. And I think China will be quite surprised that the initial promise from yesterday on Truth Social was only 10% and not 60%. And then Mexico and Canada, which no one was thinking about because Trump was the president who renegotiated USMCA, they're suddenly expecting now a 25% tariff. We'll see if that happens. So tariffs will probably increase a little bit, and tariffs on average are quite low, the tariffs that the U.S. practices. They'll increase, and that's bad for U.S. trade partners. It is also a way to get people to negotiate, including with China. There are some people close to the campaign and who will probably go back into the administration who've been telling us at the Atlantic Council Geo-Economics Center that Trump is sort of going to ignore the fact that Biden was there and simply go back to his negotiating stance just before COVID. Phase one. We promised to stop the escalation on tariffs. You promised to buy more agricultural goods. What's happened? Why haven't you done this? And that will be the basis for a negotiation. I'm not sure where it will lead. Hopefully not to too many increases in tariffs, because there aren't that many sectors in which the US can increase tariffs. On inputs, tariffs against China are already high. It will probably have to move on to consumer goods, which will be very difficult for US consumers. There'll be exceptions. On electric vehicles, they're going to go sort of very, very high, and even the Biden administration was going to do that because they perceive electric vehicles from China and connected vehicles as a national security threat. So there's really no limit to where they go on tariffs there.
But does China need the U.S., given all the concerns that they have economically, especially because of real estate? And so will they likely agree to some of the Trump deals?
China is not being too aggressive at this point. There isn't any wolf warrior diplomacy yet. I think the response to yesterday's tweet on Truth Social from the spokesperson of the Chinese Foreign Ministry was just, we're ready to talk. We haven't really started a dialogue yet, but we're ready. So I think subtly that does show you that the Chinese do want to talk and are hopeful that they can get some sort of cooperative agreement going. But Trump, there are a lot of things Trump wants, and he wants to move on to currency. He wants to move on to a sort of very broad-based deal with the Chinese, which I think that will be difficult for the Chinese government to stretch to. So it will be a difficult conversation.
You mentioned currency. We're seeing a lot. I mean, gold rise maybe as a central banks around the world getting ready for, if not getting away from the U.S. dollar, certainly trying to buy less treasuries in case of sanctions. Do you see the dollar actually waning a lot in this kind of environment?
Well, the tariffs, the economic textbooks tell us the tariffs will actually drive the dollar up, and it has slightly today. You're absolutely right that long term there are all sorts of uncertainties around the attractiveness of the main reserve currencies, dollar, euro, given that they're the main inventors of sanctions and the main users of sanctions. What does this mean in the long term? Trump himself has said he's very keen on keeping dollar dominance. He said it in his speech in Chicago that everyone paid a lot of attention to. And so I think that helps us a little bit filter between proposals that are bad for the dollar's dominance and those that are good. So this idea of a sort of market access charge to stop the dollar from appreciating, I think it's quite unlikely anything like like that comes in. Something else that might help the dollar depreciate a little, which is what Trump wants, like naming Powell's successor early, so you have a kind of shadow Fed chair, Fed governor, very possible.
Not awkward
yeah,
at all.
But it could happen, and Trump is good at awkward. And second point, you could see the U.S. itself investing in its reserves a little bit to bring the dollar down in the long term. But I think dollar dominance is something Trump is very keen on, and so it helps us analyze what is likely and isn't likely in terms of measures.
So interesting. Charles, thank you so much for joining us.
Thank you.
Charles Lichfield there from the Atlantic Council's Geo-Economics Center. Now, Bloomberg understands that Israel's Security Cabinet is to meet at 5:30 p.m. local time to discuss a proposal for a ceasefire with Hezbollah. It follows a new round of shuttle diplomacy by a senior envoy for the outgoing Biden administration. Now, it does remain unclear if Hezbollah will agree to any possible Israeli proposal. So we'll continue looking at Trump economics and, of course, geopolitics. Coming up, we'll speak with the CEO of Gavi on the potential impact of the incoming Trump administration on global access to vaccines. That's next, and this is Bloomberg. Welcome back, everyone. Now, President Joe Biden has committed at least $1.58 billion to Gavi. This is an international organization created to improve vaccine accessibility for children living in the world's poorest countries. Now, with Donald Trump taking office in January, what does the future hold for global vaccine programs? Well, Sania Nishtar, Chief Executive Officer of Gavi, joins us now. Ms. Nishtar, thank you for joining us. I mean, this is extremely important for access to vaccines in many countries that probably need it most. Could the new administration rescind part of the pledge that you had under President Biden?
Well, first of all, thank you for having me on your program. It's a pleasure to meet you in person. In terms of your question, we've traditionally had bipartisan support from U.S. administrations, and that has consistently been evident in resolutions where congressmen from both sides of the aisles traditionally have signed resolutions in support of Gavi. During President Trump's past administration, Gavi continued to have support, and I'm cautiously optimistic that that support will continue. Gavi is an organization which delivers results on the ground. It delivers them at very low cost, delivers value for money, impacts several double bottom lines. And if you look at the construct of international development and the objectives that international development should deliver on, as articulated by the incoming administration, they're exactly the ones that we deliver on. Sustainability, value for money, results, impact at very low cost. So I'm very hopeful that we will continue to have the support.
There are question marks, I guess, around some of the picks, for example, for Health Secretary, who's highly, highly skeptical of vaccines. Broadly, it seems that the new administration or the people that Donald Trump has picked for his cabinet are also very critical of the pharmaceutical industry. Do you expect a heated conversation with some of these members?
Well, I expect evidence-based conversations. Vaccines are the best buy in public health. Yeah. That is very widely believed, and that actually is the truth. Yeah. Vaccines have helped halve child mortality since they've been out there. As far as Gavi is concerned, we've vaccinated 1 billion children since we've been in inception, averting close to 19 million lives, accruing close to 200 billion in economic benefits, while having sustainability hardwired into our model. So I'm very cautiously optimistic that we will continue to have support from across the Atlantic.
I mean, beyond the U.S., do you worry about, I guess, increased vaccine hesitancy that we've seen, also emerge during the pandemic and after the pandemic?
Well, I would say that the noise is disproportionate to the actual quantum of the problem. Because, of course, social media, there is a trend that anything controversial or negative on the social media gets a lot more traction than positive and evidence-based news is. So the hesitancy on the one side is totally opposed to the demand that we're seeing from countries. In fact, as the CEO of Gavi, I have a huge line of applications from countries for the malaria vaccine, for the HPV vaccine, for the traditional childhood vaccines. Countries continue to invest in vaccination. This year, for instance, we will get a record contribution of 200 million in co-financing payments from countries. And if vaccine hesitancy was such a massive problem that it eclipsed country demand and government appetite for investments in vaccines, we would be seeing at least a slowdown at that end of the spectrum. That is not the case. And I think as far as vaccine hesitancy goes, there's a little, it's not all about misinformation and myths. It's also about the need for the right information to be out there, which is what we're going to focus on. And a lot of it has to do with the actual quality of service delivered on ground. So if a woman in Malawi or in Uganda is waiting in a health facility for 4 hours to have her child vaccinated, she, of course, is going to lose faith in the process. So I think part of what we need to work on is also the quality of execution, the right evidence-based arguments in support of this life-saving tool. We call it the best buy in public health.
And on that, can I ask you about Mpox? So we have seen delays. I mean, this is one of the vaccines that people have been most interested in. There's been delays in the rollout of some of the Mpox vaccines in Congo and elsewhere. Are there bottlenecks? Can it be resolved, and how quickly?
Well, before the rollout, I think it's important to bring to bear how the global health entities responded, learning from whatever lessons there were from the COVID-19 experience. So, as you know, when a health emergency strikes, when a pandemic strikes, when a global health emergency is announced, there are different actors that come into play at the global health level, with the World Health Organization as the steward. Gavi is responsible for the vaccine pillar, and we were able to invoke our first response fund for the first time and order the largest consignment of doses in less than 30 days. So that was a very quick response, and those doses are going to be delivered this year. But of course, your question was about rollout, and that is where the complexity of health systems at a country comes in. This is a new vaccine. Yeah. It's going to be executed with new modalities. It's a complex environment. The DRC in particular, the overall context is very complicated. But all that notwithstanding, the rollout is happening, and I think all put together, countries and the global health entities have responded much faster and quicker and in a much better way than we learning from the lessons of COVID-19.
Thank you so much for joining us. That was Sania Nishtar, the Chief Executive Officer of Gavi, with an very important conversations on vaccines and, of course, health worldwide. Coming up, Claire Lombardelli delivers her first speech since becoming Deputy Governor of the Bank of England, warning wage growth and inflation will not fall as quickly as hoped. More on that next, and this is Bloomberg.
It's too early to declare victory on inflation. It's often been said that the last mile may be the hardest, and this is where we are now. This is why I support a gradual removal of monetary policy restriction, and will be monitoring the flow of data over coming months so that we can calibrate our policy path as needed.
Well, that is the Bank of England Deputy Governor, Claire Lombardelli, giving her first speech since her appointment earlier this year. She spoke to us at the BOE Watchers Conference in London yesterday, calling for policymakers to move carefully and gradually as they cut interest rates. So let's bring in Dan Hansen, Chief UK Economist at Bloomberg Economics. And thank you so much for joining us. It was great to speak to and actually catch up with the Deputy Governor the first time that she really kind of laid out what she thinks. She's extremely careful in not giving too much away, especially when it comes to whether the budget was inflationary. Yep. But she says, I guess it's not a done deal that inflation comes down gradually from now.
Yeah, and I think that's right. I mean, I think Claire sits... I mean, one thing I'd say is it was great to hear from Claire for the first time. She was my first boss at the Treasury. So it was great to hear from her. And it was a good speech about a lot of things. I was actually very interested in what she was saying about the Bernanke review.
Yeah.
But I think going to your point, I think the evidence we've had up until now is that she's right about the last mile. There's no doubt about that in the UK. I think what's interesting and the way the committee has changed in light of the budget is that there is more. You saw on the screen there are these sort of three cases that they have. Yeah. One is the sort of immaculate disinflation. There are a few people that believe that, but not many of them. There's this sort of middle case, which is the sort of central ground. And then there's this idea that inflation might be structurally higher and therefore interest rates need to be structurally higher. And that's what she is most worried about. And I think following the budget, that's what at least Bailey is more worried about now as well. And they occupy the centre of the ground on the committee. So I think that calls for this gradual easing of monetary policy and the point that she made there in the speech.
But Dan, this is ignoring possible tariffs from the US that would be automatically inflationary, would they not?
Possibly. It depends what the UK does. I mean, it depends what the UK does if there were tariffs placed on the UK itself. I think one of the really interesting dynamics, and this is what Swati Dhingra, who's one of the other MPC members, was talking about yesterday, one of the interesting dynamics will be if tariffs, which seems almost certain, doesn't it, that tariffs go on Chinese exports to the US, if those Chinese exports get redirected to the rest of the world and Chinese exporters drop their prices, then the rest of the world could quite possibly be importing a big dose of disinflation, not inflation, but disinflation. I think the traditional thought process is that tariffs, yes, they're inflationary, they're potentially supply chain snarl-ups, again, that's inflationary. But I think there's that secondary dynamic that if there's sort of a trade war amongst, I guess, the rest of the world, that's what the bank will be focusing on as well, just as much as that inflation side and the tariff side that you mentioned.
Dan, thank you so much. As always, great work, of course, leading the team there at Bloomberg Economics on the UK, Dan Hansen. Up next, Bloomberg Brief, Danny Berger and Manus Krajny in New York, and this is Bloomberg.